Good morning, good afternoon, good evening, and welcome to our 311th weekly webcast. Now, if this is the first time you're joining us, welcome. If you've been with us before, welcome back. And so the way this call works is this is an AMA, like you see on Reddit. You can ask me anything. You can ask me business questions, career questions, investing questions. And my humble goal is to help you take your portfolio, your career, your personal life, your happiness, etc. to the next level. So without further ado, let's begin. One quick housekeeping announcement. I will be on vacation next week. I'm taking my youngest son, Dylan, who's 14 now, they grow fast, to Florida to see my parents. We're going to play golf and have a good time. So again, no calls next week. And that goes for all MBA degree programs. There's no one-on-ones or webcasts as well. Okay, let's get started. All right, first up, Tommy wrote, when examining a balance sheet, how does someone determine what factors can someone consider to say that the balance sheet looks good? Yeah, so it depends if it's a personal balance sheet or a corporate balance sheet. I'm going to show you both examples. So recently in my MBA degree program, I published an elective that all my MBA degree program students get for free. It's a complete real estate elective. So I'm going to click over here on the real estate formulas tab, and we can walk through what balance sheet items make sense for most of you personally, and then we'll talk professionally. Okay, let's kick it off with your personal balance sheets. Okay, so first of all, you look at your net worth, which is assets minus liabilities. Okay, and you want that to be positive and increasing over time, as you can see right here, the suggested number just behind my head here. And give me a second, I'm going to hide this top part here of this tab so that we can get a little bit more real estate so you can see what I'm talking about. All right, the next thing we'll talk about is something called the current ratio. And that means current assets over current liabilities. And you want that to be greater than 1. Okay? And then moving on down to the next balance sheet item, we want to look at your savings rates. Okay? And this is from the balance sheet and your income statement. So you want your annual savings divided by your pre-tax income to try to be 20% or higher. So what that means is this. If you make $200,000 per year pre-tax, you want to try to save, it's hard, I know, $40,000 or more, meaning 20%. And Warren Buffett famously said, you want to spend what is left after saving instead of saving what is left after spending. And so a best practice I humbly recommend you all start doing right now is every 2 weeks when you get your paycheck, if you can do it, and times are tough, I get it, but if you can do it, I want money to be taken directly out of your paycheck and put directly into your retirement savings account. If you don't know what to buy, I'll tell you what I do. Please do your own research first. What I usually buy is ticker VOO, which is the S&P 500 index fund, which has a very low fee. I don't care where the market's going in 6 months. I don't care where the market's going next year. I know in my heart the market's going to be much higher in 10 or 20 years. So if all you did was you took $20,000 per year, roughly, and you put it into the S&P 500, I humbly believe that in 20 years, if you do that every year, in 20 years, you'd have over $1 million. Now, if your spouse did it as well, you'd have over $2 million. If you also got educational savings accounts set up for your kids, meaning 15 grand per year, which is tough to do every year, then in 18 years when your kids go to college, if they want to go to college, you'll have 700 grand per kid. That's 3 kids for me. That's 2.1 million plus myself, my spouse. Hypothetically speaking, that's an additional 2 million plus real estate, etc. But just always think long term, please. All right. Next up, there's something called the debt to equity ratio. Okay, and this means total liabilities divided by total equity. Okay, and we want that to be below 2. This next one here is pretty important. It incorporates the balance sheet and the income statement, and this is called the emergency fund ratio. And this is total liquid assets, meaning assets you can turn to cash quickly, divided by your monthly expenses. And I want you to probably have at least 6 months worth of emergency funds on hand, just in case, God forbid, something happens to our job. There's a couple other things you can look at, and I'll go through these quickly. There's return on investment, which is the current value of your investment on your balance sheet minus your initial investment, divided by the initial investment value. And some of these might be a little bit tricky to understand, but I make it crystal clear within this real estate elective. You can click here to go directly to the source. And there's other ones as well that I can talk about in more detail if you want me to. Now, all of this stuff I'm showing you right now, again, it's free for my MBA degree program students. If you're one of my MBA degree program students, just go to the last lecture of your curriculum to download this complete real estate elective right here. And what I always try to do for my students, humbly, is I try to help you to work smarter, not harder. So what I do in this course and many of my MBA electives is I ask you tons of questions about an investment. And then what comes out of that are your financial statements, a one-page executive summary, and a really detailed business plan. Okay, and this works for every single country in the world when it comes to real estate. Let me go back to Big Chris mode here, and I'll show you what it looks like. So when you're done that elective course, it's an 8-hour course. I poured my heart into it. I love doing it. You're going to have a massive business plan for the real estate investment property or your primary home or a condo, etc., or a commercial piece of property before you buy it. And I want my dream is for all of my students to make way more money in the long run from your investment rental properties than you do from your base salary. Yeah. And real estate's the best investment you can make. I think even better than stocks longer term. And the reason I say that is because the wealthiest people in the United States, for example, they all own real estate and they rent out properties. And what you can do with that is you can use depreciation in order to minimize the amount of taxes you pay. You'll get an accountant to do it for you, but it's a beautiful thing. And the richest people in this country don't pay very much in taxes. In fact, the 400 richest families in the United States only pay about 20% in taxes because a lot of them own real estate. And I remember back in 2016, during the first televised debate between Donald Trump and Hillary Clinton, Hillary Clinton was making fun of Donald Trump for not paying much in taxes. And Donald Trump, who's very transparent, it is what it is, he came out and said, "Of course I don't. I own real estate and I get to depreciate this stuff." Okay. All right, let's move on now to the next question. Next question is, I'm thinking about investing in a condo in Manila, Philippines, but the prices seem overinflated. How would you recommend evaluating the condo market there and determining if it's a good purchase? I'll answer this in a generic way to apply to every condo on the planet in case anybody wants to buy a condo in another country. So the way you're going to do it is in the very last lecture of the MBA degree program, and this is not available on any website anywhere except for my website, there's this complete real estate course. You're going to take it, and I'm going to walk you through the process of deciding if a condo or a house or anything is overvalued real estate wise. And the way we're going to do it is we first of all look at location, but I teach you 5 valuation methodologies to value real estate. Number 1, price per square foot. Number 2, gross rent multiplier. Number 3, the cap rate. Number 4, the cost approach, which means if you got rid of all the buildings and you rebuild it from scratch. And lastly, number 5, the net present value, which is very similar to discounted cash flow. And of course, as you go through this real estate elective here, if you have any questions for me, you can always ask me. Now, the way that my program works, my MBA program, I'll explain this very briefly. The way it works, and you can always go to harounmba.com to learn more. But the way it works is I've got 3 different programs. Okay, Accelerator, Executive, and Diamond. And in these 3 programs, these are newer programs, you get daily group Zoom calls with me every single weekday. So you get 500 hours of my content only available on my website, which you get forever. Plus you get daily group Zoom calls. So you get 7 hours of group Zoom calls per week. That's 350 hours per year. 350 plus 500 is 850 hours of priceless, in my humble opinion, business education. And then here in the executive and diamond programs, you get one-on-ones with me as well. All right, let me move on now to the next question. What does it mean when somebody uses the term PE multiples and 20%? Yeah. So PE, basically what PE means, and I'm going to make this really easy so that you never memorize this stuff, you understand it. It's more fun this way too. So when you forecast financial statements, you start with revenue. Okay, these red items here are expenses. So you forecast revenue, and then you make these expense items, for the most part, a percent of revenue, except for taxes, a little bit different. Then you're going to get net income, which is the same thing as net profit or earnings. Then you're going to assign a PE multiple to it. Okay, so let's say that we forecast net income, meaning our financial model, which I teach you in my MBA programs. We forecast it. And in year 5, we've got $1 in earnings. Okay, and between year 4 and year 5, earnings are growing 20%. That means, and this is simplistic, that means that our target price should be 20 times earnings then. So what does a 20 times PE multiple mean anyway? So for the rest of your life, I always want you to assume that whenever you see a fraction, you're going to love this. Whenever you see a fraction, the denominator is always number 1. So what that means is a PE of 20 means for every $1 in earnings per share, investors are willing to pay 20 times that $1. Now, earnings growth in this hypothetical situation were 20% per year. So if earnings growth was only 10% per year, then it probably makes more sense that investors would want to pay only 10 times that $1 in earnings. Now, historically, and this is a very rough estimate, the S&P 500 usually trades at 15 times earnings. And what that means is this. For every $1 in earnings per share for all 500 companies in the S&P 500, investors are willing to pay $15, a P of 15 times. Now, historically, the S&P 500's earnings grow very roughly at 15%. Now, some of the companies in the S&P 500 that trade at higher PEs, it's because earnings is growing faster than 15% and vice versa. Now, last thing I'll say on this topic is smart money tends to value companies based on what they believe the earnings are going to be many years into the future, at least 5 years into the future. And that way you'll sleep at night knowing that, yes, it looks like the stock that you love today trades at a PE of 100 times, but it only trades at 3 times your earnings estimates in 5 years when you forecast the financial statements, which I teach you how to do in my MBA degree program. Now, when you're forecasting financial statements and you're trying to come up with a target price on a company, in addition to doing the forecast, what you also want to do is you want to do a qualitative analysis. So this is another template in my MBA degree program. And I learned this from working, this is my greatest hits, humbly, from working in the venture capital sector, working on Wall Street at Goldman Sachs, and working for the top hedge funds in the world. So whenever you analyze a company, you look at qualitative research. You always start with the management team because that's what a company is. Then you do quantitative research, like the size of the total addressable market, and don't ever invest in a company that has a tiny market. Then you do quantitative research, more financial research down here, forecasting the financial statements. And the last thing you'll look at is technical analysis, the very last thing. Now, what comes out of this, similar to that real estate spreadsheet I showed you a couple minutes ago, what comes out of this are 3 outputs to help you work smarter, not harder. Number 1, a 1-page executive summary that you can print out. And a lot of my students, a lot of my clients will print out, and this is dummy data here, will print this out and put it on the back of their resume. Okay. What also comes out of this is a detailed report that's 100 to 150 pages. I promise you, if you do this for your interviews, you will run circles around the competition and you'll teach your interviewer something about the company as well. And the last thing comes out of this, number 3 or 3th, as my son Andrew used to say, who's growing up too fast, is a dashboard with tons of visuals. So I ask you about 800 questions in this process here so that you can come up with a target price and decide whether or not to invest in a company. And I put all this in place as a safety net for you so that you can plan accordingly. Because if you don't do a write-up on an investment, including a condo you want to buy or a stock you want to buy, then there's a good chance you could lose money, because failing to plan is planning to fail. It's commensurate with writing a business plan first. And of course, I have a business plan template for you as well. Let's move on now to the next question. In private equity, I often hear the term value creation or a job title value creation consultant. Are you familiar? And what does that entail? Yeah. So the way that private equity works is private equity companies will buy undervalued companies that are either private or public. Then they'll add value to that company by replacing the management team or cutting expenses. Then they'll sell the company back to somebody else or take it public again. And what they're doing is they're adding value there. Now, if you want to learn more about private equity, I recommend reading a great book I read back in the 80s when I was a kid called Barbarians at the Gate. And it's about Henry Kravis, who basically created the private equity sector when he did a private equity deal on the National Biscuit Company, which is Nabisco. And he started KKR as well. All right. And I love the guy too. So Henry Kravis went to the same business school as I did, Columbia University. He's older than me and way more successful than I'll ever be. But I remember during business school, he came in to guest lecture and I sat front row center because I was excited to hear him talk about deals and give us this incredibly sage advice. And all he did for an hour and a half was he talked about giving your time to help others, mentor people along the way, not just money, your time. And I love that. And what I learned from that is that when one teaches, two learn. And so the bottom line is I want all of you to mentor people younger than you at the companies you work at, or maybe a younger brother, sister, your kids, obviously a younger cousin, etc. So mentor others, because what it does is it reinforces your DNA blueprint for what you believe success is. And for those you working in big companies, I want you to find multiple Yodas, meaning multiple mentors as well. It's the only way you're going to get promoted. And I'm happy to answer questions about how to ask for a raise or ask for a promotion in a way that I promise you works. Yeah. Okay. Next up, Boss SMG wrote, good morning, Chris. Hey, how are you? How long will the tariffs last and what will the results be? Thanks. Let me answer that in reverse order. So the results, according to Donald Trump's strategy longer term, is if you put up walls and you make stuff more expensive, like the 25% tariffs for auto imports that he just set yesterday, what will happen is in the long run, more international companies like Hyundai and a lot of South Korean car companies, which are getting hit the most out of all countries, they'll start to build more plants in the United States. And that will create more jobs, which will help the U.S. economy big time in the long run. The problem is there's going to be a shock to the economic system globally in the near term because of this. And we're already seeing it, especially with respect to Canada. I'm a very proud Canadian that lives in the United States. I think it's a little bit unfair what's happening, more than a little bit unfair to Canadians. It's going to cause, I think, a recession in Canada and some other countries as well. So there's going to be pain in the near term for many countries, including the United States. But in the long run, it could help the United States a lot. Now, we have to make sure, and hopefully there's enough checks and balances in place that we don't overdo this, because the Great Depression was caused by tariffs. Yeah, putting up too many walls. Now, I'm going to be intellectually honest and try to understand it from Trump's perspective. Okay. And if you voted for Trump, if you're a Republican or a Democrat, I'm not going to get political here. There's nothing wrong with being critical of policies. Nothing wrong with that. But what he's saying, Trump, and he's been saying this since the 1980s when he was on the Oprah Winfrey show, you can watch those videos on YouTube, is, in his opinion, America's been getting ripped off by lots of countries for many, many years. Lots of countries have very high tariffs on America, but not vice versa. And it goes a little bit deeper as well. I'm sure you guys saw the mention of that Atlantic article when there's a certain chat system that a journalist from the Atlantic was on, and the Secretary of Defense was on, as well as the Vice President of the United States, and they knew about the attack coming in Yemen. And what the Vice President of the United States said was, I'm tired of bailing out Europe. 40% of trade that goes through that region of the world is from Europe, and only 3% from the United States. So there's sentiment in government right now in the United States that the United States has been paying too much to help Europe and not vice versa. And so what Trump is trying to do is he's trying to be a little bit more insular to the extent that Europe is already starting to pay more for their own national defenses, etc. I don't want to make this political. I didn't vote in the last election. But anyway, I'll just leave it at that. Now, if this is overdone and there's a stock market crash because of tariffs, I really think Trump will reverse course. I really think he will, because I think that his report card in the near term is going to be how well the economy is doing, and especially how well the market's doing. Yeah. Okay. I'm a firm believer in free trade. All right, let me move on now to the next question. You mentioned relationships are more important than product knowledge. Yes, they are. What if I don't know much about the job requirements? Do I have a chance of getting hired based on relationships? You do. It depends on the level. So if you're changing careers and you're starting at the bottom, right, entry level, you don't have to have a ton of knowledge about that career or the job function. You have to know some, of course. Because what happens is large corporations will train you from scratch anyway. But you want to be able to bond. Now, every time you see a job opening online and you send in your resume, which you should not, every time you see a job opening online, you have a 1 in 250 chance of getting that job. So how the heck do you get that job? And who the heck gets hired anyway? Well, quite often it's somebody that knows someone at the company. Okay, well, if these are the rules, then you got to know someone at the company. Here's how you do it. Step 1, write an incredible LinkedIn profile. And my team and I can help you. If you join my MBA degree program, just see the link in the description for more details. Step 2, once you have an incredible LinkedIn profile, what you're going to do, and we will train you to do, is we'll train you on how to get a ton of informational meetings with people that have something in common with you. Step 3, in the informational meeting, very important, and with all meetings for the rest of your life, especially a first meeting with somebody, do not talk about business right away. You got to bond before business. You have to talk about what you have in common with somebody. Business is about relationships first, again, product knowledge second. So what the heck do you talk about? Well, what you can do is you can go to their X profile or Insta profile and see if they follow, I don't know, something that you love as well. So if they follow hockey, you might be able to gently bring up hockey or sports in your informational meeting. And about 10 minutes usually goes by. And then the interviewer or the person that you're networking with will very politely say something like this: "Why are we meeting?" They won't say it like that. Then you pivot and you say something along the lines of, "Well, I'm very passionate about the industry you're in, and I'd love to just please humbly ask you what a day in the life is like." Then they'll talk about a day in the life of whatever it is they do. And here's the tricky part, okay? And remember, closed mouths don't get fed. You then need to do this. You need to ask them if they're hiring. And be nice about it, obviously. But remember, closed mouths don't get fed. Asking you will receive, it's prophetic. It's been true since the beginning of time. Now, you're not just going to do this one time. You're going to do this 20 or 30 times with people in every company you want to work at. And I promise you, rinse, lather, repeat, do this over and over and over again. It will work. Now, you might be thinking, Chris, hold on a second. Why would anybody take a meeting with me? Well, I want you to find people who have something in common with you, okay? And I want you to visualize this. Let's say it's 20 years in the future, and you're way more successful than you already are today. And somebody reaches out to you and sends you an in-mail. They have a great LinkedIn profile. They send you an in-mail. And in the in-mail, and by the way, don't send emails, because you've read every in-mail you've ever received. But in the in-mail, let's say that 20 years from now, you get this message. John, for example, hope all is well. I also went to the same high school as you, and I also went to the same university as you, and I'm also from the same hometown, and I live here in the Bay Area. Just a couple things in common. Please let me know if you have time for a coffee. Thanks a lot, Chris. Would you take that meeting? Of course you would. because that's basically you 20 years ago. So do it. And in business, you only have to be right one time. And Michael Jordan is one of my favorite quotes of MJ, who's better than LeBron, kids. Yeah. He said, "I've failed over and over again in my life, and that's why I succeed." You only have to be right in business one time. Do this over and over and over again. And I promise you, you will be able to change careers, get that job, etc. Yeah. Now, in terms of understanding the basic knowledge of an industry you want to work in, you can join my MBA program. We talk about literally every business topic you can think of. I also teach it to you in a practical way with tons of templates so you can work smarter and not harder. Yeah. All right. And the reason I use a straw with my coffee, some people ask, is because my teeth weren't as white when I don't. Anyway. All right. Okay, and I read every comment, every question out loud. Out of curiosity, if your children were to ask you, what are the top 3 fields to get into today, what would you recommend to them and why? Yeah. So my son, Andrew, my eldest son, he's 3rd year Berkeley now. He's working in investment banking. My son, Matthew, he's in university now as well. He's interviewing right now to work at an asset management firm. And my son, Dylan, who's 14 right now, I don't know what he wants to do. But what I tell Andrew is this, and Matthew, my older kids. I say, if you're not sure what you want to do, and this goes to everybody that's looking to change careers, I want you to get what's called an origination job where you create the product. Now, you asked me for 3 examples. I'm going to give you 3 origination job examples. The first origination job is to work in investment banking, where you're originating the IPO product. Okay, or the M&A product. And I'll explain why origination is important in a second. The second example of origination is you work in consulting. Like I started my career at Accenture and then I went to Goldman. In consulting, you're originating, meaning creating the corporate strategy. And the third example of origination is you work as a developer, maybe programming at Google, for example. You're originating the code. Now, in all 3 of those examples, we talked about originating, meaning creating. And the reason that's important is because if you hate originating the product, meaning creating the underlying product, you can always move on to a sales role, selling that product, or marketing that product, or managing people that do that product, or start your own company based on that product. So if you hate investment banking, for example, so sorry, it's too early for bad dad humor. If you hate investment banking, for example, that's okay. You understand how to originate the product. So maybe you can move on to another role, selling the product on a trading floor or working in private wealth management, for example. If you work in consulting at a firm like Accenture, which I love working at, and you hate the corporate strategy, creating the product, that's okay. You're very marketable. You can move on to some other management consulting role, or better yet, become CEO of a company. And a lot of people that used to work at McKinsey, which is the best consulting firm on the planet, and they rejected me. A lot of people that used to work at McKinsey are now CEOs of companies, including the new CEO of Udemy. Now, when it comes to being a developer, if you try programming, and in my MBA degree program, I teach you Python and AI and tons of tech stuff. If you hate being a developer, that's okay. You can move on to manage people that are developers, or you can even do this. So you think about Apple Computer. So Steve Wozniak was a techie. He was a developer, right? And Steve Jobs was, God bless him, a great salesperson. So that's a good yin-yang. So if you hate being like a Wozniak and you're more of a Jobs, you can partner with a Wozniak because you understand what this person does. So I hope that helps with that question. And if you have follow-ups, please let me know. Thank you. All right. Next question is, what skills do you feel are absolutely necessary to succeed in today's environment, and why? Yeah. So I would say the most important skills, which are not taught in traditional business schools, but they're taught in mine, is number one, how to network. That's not taught in business schools. You have to learn how to network. And I teach you that in my MBA degree program. And my success rate, humbly, my success rate on getting meetings with people I've never met before by leveraging my networking methodology on LinkedIn has always been 95%. And I don't say that to impress you. Rather, I say it to impress upon you the fact that you can do it as well, and I teach my students how to do it. So number one is networking, which is not taught in business school. Another skill you need to learn is how to interview, which is not taught in business school. I teach this as well. You also need to be able to leverage social media so that you can be thought of as a thought leader. It's like the Rodin sculpture, I think, therefore I am. So you need to learn how to write like a business journalist, which I teach you as I have my own column in Forbes magazine. And my latest article on MBA schools just came out. Just go to Forbes website, you'll see it. And if you write lots of articles on LinkedIn, which cost you nothing, then people that go to your LinkedIn profile will think of you as a subject matter expert. You can fake it until you make it, or just think of it as a fact you already made it, like the Rodin sculpture, I think, therefore I am. And it becomes self-fulfilling. The marketplace thinks you're an expert. People will interview you from various publications, etc. Now, after you write all these articles, what you can do is you can do what I did. Okay, this is the back of one of my books. What you can do is all the articles you wrote in LinkedIn, you can put them together into a book, and I have a book template for you as well. You can give this out during informational meetings, which will help. And I did that with 101 lessons I taught in this book, which is the basis of my MBA now, that are not taught in business school. Other important skills you need to be successful is you need to learn how to present, which I teach you. You also need to learn how to sell. There's nothing more important than that. And every great entrepreneur or CEO or partner in a law firm or a VC firm, they have one thing in common. They're great salespeople. They don't teach you that in business school. You also need to know how to write an amazing business plan, which I teach you as well, because failing to plan is planning to fail. Another thing you need to understand to be successful in business is how accounting and finance works, right? And this is not common sense right away. It's like a different language. And I teach it, where's my net income? I teach it in a visual way. Everything I teach is visual so that it's edutaining, meaning educational and entertaining. Entertaining because you laugh at me, not with me. Okay. Next up, Tommy wrote, thank you, Chris, for all the value you provide. My pleasure, and thank you for being here. I always have fun doing this. My goodness, this is week 311. I'm going to be doing this forever, guys. Yeah, 6 years. All right. And I've grown my business organically over the years, and I got to the point where I'm like, dude, my goal is to use the profits from what I do to build 1,000 schools in Africa. So a couple of years ago, we finished our school in Rwanda. We're working on Kenya now. And I realized that, oh my gosh, I can't do it if it's just me. I have a lot of contractors, so I hired tons of people. And so 1,000 schools times a cost of $100,000. That equals $100 million. So I'm scaling my big business big time. I'll make mistakes along the way, but I've hired tons of people. And the way I teach is based on my humble successes and my failures as well. Yeah. Okay, but if there's any MBA degree program students that have graduated from my program, I'm going to be hiring a lot of them as well as we scale this business. Yeah, and you'll learn more about that soon. I'll be emailing all my students about jobs and stuff. Yeah. All right, next up, Peter. Hey, Peter. Peter wrote, do you have an opinion on universal basic income, meaning UBI, especially as the eventual convergence of AI and robotics will replace the need for a lot of unskilled and low-skilled labor? Yeah, I'm completely against it. And the reason I'm against it, and so for those of you not familiar with UBI, it means governments giving a base salary to people. I believe that governments should provide assistance to those that are unemployed or those that really need it, veterans, the heroes to our country, etc. However, if you establish a system where you give away money to everybody, meaning base salary to everybody, it basically becomes socialism and eventually communism. And I think communism is filth. I believe in freedom of the individual. So I'm completely against that. Now, a lot of people are worried that, AI is going to take all of our jobs away. I think of it differently. I teach everything about AI, or a lot of AI stuff, in my MBA program. I think that we're always going to adapt, and we're going to use technology as a weapon to be more productive. And if you go back to the 1980s, the robotics industry really took off, especially Japanese robotic car companies. And what happened was a lot of people back then thought, oh my gosh, all our jobs are going to be taken by robots. No way, man. We all adapt. We always do. We're too smart for that. 96% of the U.S. economy, hundreds of years ago, was agrarian. Everyone was a farmer. Then we have machines and other stuff. Now it's only like a couple percent. We adapt. The same skeptics said in 1999, when Google first was commercially available, that, oh my gosh, we're going to use Google to do all our searches and stuff. We don't need to be hired anymore. Rubbish. The same thing at the end of 2001, when Wikipedia came out, a lot of professors in business icons were saying, hey, Wikipedia is going to do everything for us. We don't need to really think anymore. Rubbish. And the same skeptics or journalists that are often wrong are saying the same thing about AI right now. I would not worry about that. We always adapt. Maybe we'll work 4 days a week instead of 5 and we'll be more productive. I can't tell you how much more productive my company has been since I started using AI. It's incredible. Use it as a competitive weapon. Try to disintermediate or disrupt yourself before the marketplace does. And the best example I can give of this is Reed Hastings, the brilliant founder and former CEO of Netflix. Good guy too, and I met him here in the Bay Area at a house party not that long ago. He's really interested in education with Netflix now too. But what he did was he disrupted his own business model years ago. Remember years ago with Netflix, it was DVD rental service through the mail. Well, he looked out longer term. He said, you know what? That business model doesn't make sense. So he disrupted himself with video streaming. We need to be the same. And before you invest in any company, and before you evaluate your career or your role, you need to ask yourself this one question. In 5 years, is this company I'm working at or this role I have going to be more relevant or less relevant than it is today? And that will stop you from investing in value traps, meaning stocks that are cheap for a reason. And that will stop you from doing the same repetitive task over and over and over again without thinking about how to reinvent yourself or skilling up by taking online courses, etc. Okay, next question is, what do you make of China's lights out factories? And these are factories that are fully automated with no staff on the factory floor. I think it's a great thing. I think the more automation we use, the more that we can reskill and be able to reinvent ourselves in new industries. You know, my children, it's so interesting because the way my kids communicate with each other when they're my age has not been invented yet. I'm so excited about the future. There's going to be new social media products we can use, new paradigms, new platforms we're going to be able to use in the future. Just stay on top of this stuff. And it's exciting because if you're an early adopter, you're way ahead of the competition. And always ask yourself the 5-year question again, which is this. In 5 years, is this technology or platform going to be more relevant or less relevant than it is today? All right, next up, Purnell. Hey, Purnell. Purnell's in my recent MBA program I launched. Purnell wrote, hey, Chris, I'm not sure if this is correct, but what does it mean for a company to anchor a particular price on an IPO? Yeah, there's a couple ways to read into that. One way is for institutional investors. Before the IPO, what they can do, or this can happen, is they can buy the share price of a stock at a certain level before the IPO. And what this does is it gives investors confidence that there's a floor so that the likelihood of a broken IPO goes down. Yeah. And if you have follow-ups, let me know, please. All right, please continue to type your questions. And if I can't answer your questions when you guys type them here, every single Thursday, except next week because I'm on vacation, every Thursday at 10 a.m. Pacific time for 3 hours, I do a 3-hour group Zoom webcast with my students in my MBA program. In fact, I do daily group Zoom calls, small calls with my MBA students. To learn more, just go to the description of this video. All right. Next up, Peter said, what would you say the most misunderstood things are about business and finance? First, by people just starting out, and then by people with an MBA or experience. Yeah, the most important thing I would say is that when I was younger and I used to go into meetings with people I never met before, I'd jump right into business. It's not like that in the real world. It's about relationships. You have to bond with people, especially the first time you meet them. Now, remember the first 2 weeks when you were in high school, your first 2 weeks of high school, or your first 2 weeks of university. Those friends you made then are still your friends today. So what I mean by this is when you're the new kid in town and you start at a new company, you've got 2 weeks to network like crazy and meet as many people as you can, coffee meetings, finding mentors, etc. Relationships are more important than product knowledge. Bond before business, always. That's the most important thing I would say. Another thing that people don't realize, and I'm going to teach you all how to get a raise or a promotion right now. Another thing people don't realize is everybody around you in the company you work at that makes more money than you or is in a more senior position than you, there's a good reason why, and you might not realize this. Behind closed doors, they ask. Asking you'll receive. It's prophetic. It's been true since the beginning of time. When we're younger, okay, and we're in school, we keep our heads down. And we work really hard. We get good grades. And, our parents are proud of us. Our parents leave us alone. Teachers are nice to us. Life is good. Then you join a company and you do the same thing. You keep your head down, you work really hard, and you'll think you'll get noticed. And then a couple of years go by and you look around and you're like, WTF? Why the face? If my mom's watching, if you're our mom, I love you. You look around and you're like, why are people getting promoted faster than me? This is ridiculous. I'm doing just as good as a job as they are. I don't get it. What's up with that? Do you know why? Because behind closed doors, with their boss, they ask for a promotion or a raise. You'll never get anything you want in life without asking. Closed mouths don't get fed. So how do you do it? How do you ask for a raise or a promotion? That seems kind of uncomfortable to me. Here's what you do. Every 3 months, you sit down with your boss and you just ask for feedback. Okay? And you say something along the lines of, if true, I really love working here. Our team has accomplished a lot together and there's so much more we're going to do. I want to ask you for some feedback, please. Can you please provide me a little bit of feedback on how I can add more value to our team so we can meet our goals? And they're going to tell you. And by you doing that every 3 months, the probability of you being fired goes down materially. Because quite often when people get fired, it's because they're doing 1, 2, or 3 things wrong. Well, it's self-correcting. You ask for feedback. Then I want you to do this. When you think you're ready to be promoted, okay, I want you to do this. When your boss comes up to you and is in a good mood and says, great job on this, whatever it is you did, I want you to immediately say, thank you. Do you have time for a coffee? And in that coffee meeting, what I want you to do is this. I want you to bring a notebook and a pen, and I want you to say this. I really enjoy our team. We've accomplished so much together, and we're going to accomplish a lot more as well. I want to ask you for some feedback, please. As you know, it's very expensive to raise a family here in the Bay Area or wherever you live. And I want to be able to provide the best standard of living I can for my children, my family. And so I wanted to please ask you for advice on what do I need to humbly accomplish, meaning what additional value do I need to add to this team in order to be considered for a promotion or a raise? Thank you. And they're going to give you the advice. And you're going to write everything down, okay? And you're going to thank them for their time and all that stuff. 6 months go by. And your boss says to you, again, congratulations on a job well done. You're going to say, thank you. Do you have time for a quick meeting? And during the meeting, you're going to say something like this. Again, start with the whole teamwork thing. If true, I really enjoy our company. We've accomplished a lot as a team. Now, 6 months ago, we sat down. And remember, I was explaining how, with my growing family, I want to provide the best standard of living I can for my family. And I asked you for some advice on what I need to accomplish, meaning what additional value do I need to add to our team in order to be considered for a raise or promotion. And you gave me great criteria. Thank you so much for that. Where I'm very humbled to say that I fulfilled all 5 things you told me to do. And as a result, I'd like to please ask you for a raise or a promotion. Thank you. Now, if they don't give it to you right away, do it again every 6 months. And they're going to respect you more if you ask, by the way. They're going to respect you more because they've been in that situation. You know, maybe they have kids. Maybe they had to ask for a promotion before. And this is the secret to success in a corporate environment. You have to ask many times behind closed doors. And that's why people around you that seem less competent than you are getting promoted faster than you. I say it with love in my heart. Ask and you'll receive. It's prophetic. It's been true since the beginning of time. Now, another good thing about this strategy is that you're subconsciously reminding them that you want more. And if they have to let people go, they're less likely to let you go. They want to promote you faster because they don't want you to leave. Yeah. I hope that makes sense. And if you have follow-up questions, let me know, please. Okay. Another thing I'll say when it comes to business and finance being misunderstood, it's not just about relationships. Like you got to learn the basics of accounting. Like accounting is another language. You have to learn the basics, but you got to keep it simple as well. And so when you value companies, and I can go off script, talk about this forever if you want. I don't want you to focus too much on discounted cash flow for valuing companies. I want you to focus mainly on price to earnings target prices. And the reason I say that, I'll be really quick with this, is because forecasting an income statement and figuring out what earnings are going to be in 5 or 10 years is pretty simplistic. If you look at it on a non-GAAP basis, I can go there if you want me to. DCF is ridiculous. There's too many unknown variables. If I told you X plus 1 is 3, what is X? It's 2. That's PE. It's easy. If I told you X plus 3 plus W plus Q plus circle plus coffee plus straw is 3, what's X? No idea. That's what DCF is. So keep it simple. So KISS, keep it simple, stupid. Yeah, always. Less is more too. Next question is from Thabo. Great to see you. First time I've seen you on the call. Hope you join us again. Question is, hi, Chris. If I may ask humbly, of course, why do investors prefer PE ratio and PEG ratio rather than key value drivers by McKinsey valuation model when determining valuation for stocks? Because it's simple. Less is more. There are fewer unknown variables. Many years ago, big consulting firms like McKinsey were telling us all to use VAR and other valuation methodologies. But it's garbage because there's too many unknown variables. Garbage in, garbage out. Keep it simple always. Yeah. All right. Lay wrote, good morning. Looking forward to hearing the Q&A. Great to see you. Thank you. Moving on to Simpson, who wrote, you're a blessing. Thanks, Chris. I appreciate that. Thank you. My father would say, Chris, you're a treasure. We need to bury you. I'm just kidding. He wouldn't say that. My dad humors off. You wrote, understand you're a critic of traditional MBA programs. I am. It's $100,000, waste of money, takes you out of the workforce for 2 years, and they teach you theoretical crap that's not applicable in the real world. Yeah. And that was apparent to me when I graduated from Columbia, and I was at Goldman. You know, my Columbia classmates and Harvard Business School people were in my class, and were like, dude, we didn't really learn anything applicable. Yeah. It gives you confidence maybe because you have an Ivy League degree, but whatever, it's all up here. It's like the Rodin sculpture. You know, I think, therefore I am. And the harsh reality is a lot of students in my class when I went to Columbia, and a lot of people that went to Harvard, their parents went there, or their grandparents or uncles or whatever it is. And maybe, you know, one of the buildings on campus is named after them. That's not fair. Yeah, it's ridiculous. And I think that my kids are the last generation that think that maybe they should consider going to university. I think in my lifetime, only 20 or 30 universities will be left by the time I leave. And I think what's going to happen is this. People are going to start to say, I'm not going to go to university unless it's a great brand, you know, like an Oxford, Cambridge. And what's going to happen is a lot of universities are going to see enrollments go down. And so they're going to deplete their endowments. And then there's going to be a kind of a Hail Mary pass type situation where alumni are asked to donate to the school. And that's not going to be enough. And so most universities will go belly up, I think. Yeah. All right. And I humbly believe that education, as Nelson Mandela said, is the most powerful weapon that we can use to fix or change the world. And as Malala once said, God bless her, she said, with guns, you can kill terrorists, but with education, you can kill terrorism. Yeah. And I think online education is the way to go. Okay. Next question is, what is your opinion on specialized master in finance? Okay, let me talk about going to graduate school, period. Okay, if you're going to go to if you want to be a doctor, of course, medical school is great. You got to go. Same thing with a lawyer. Now, if you're thinking of another degree, before you waste your money, I want you to do this. I want you to set up 100. The reason people go to graduate school is to change careers or get a better job. So before you even think about going, I want you to set up 100 networking meetings with people that work in the industry you want to work at. And I teach you how to do that in my MBA program. And I want you to try to see if you can change careers through those 100 meetings. And if you can't, then sure, consider going to a traditional school and spending $100,000 plus being out of the workforce for 2 years. And a traditional MBA costs $100,000. So think of the 100 meetings you're going to take as saving you $100,000. So each of the 100 meetings saves you $1,000. 100 times 1,000 is $100,000. Now, if you want to learn more about how to network to get customers, a job, or anything you want, what you can do, if you want to, is you can go to my website and download this for free. So just go to harounmba.com, scroll down to the bottom right here, and you can download this book here, which will give you a lot of advice on how to network to get your next job, customers, whatever it is. Yeah. Okay. Next question is, Shivansh wrote, in your Excel complete course, or is it just a beginner level introduction? Yeah. And then you wrote, do you teach Power Query and advanced things? I definitely teach a lot of advanced things. As with all my courses, there's different ways to take it. So I can appeal to a massive total addressable market. There's a beginner track, intermediate track, genius track, and the alt track. I teach you everything about Excel. Literally everything. Every function, every icon, every menu item. And I also teach you programming. And the way I teach you programming is I use a lot of props, right? It's object-oriented programming. And if you meet me in real life, I'm a tiny man. And I've used that joke before, but that's dad humor. I'm so sorry. Yeah. I don't teach Power Query. If you want, there's a friend of mine, Layla. Just do a search for Layla Excel on YouTube and take her courses. She's wonderful. She's based in Austria. She's the best Excel teacher on the planet. But the great thing about my course, humbly, is it's a great introduction, Excel. It's a great introduction to programming as well. And after you finish that MBA elective of mine, you move on, if you want to me teaching you Python in another MBA elective. The great thing about learning programming through Excel, is you can record macros. When you record macros in Excel, it records every keystroke, etc., like creating a chart, making a cell, text bold, whatever. You hit stop recording, and the code is created for you, and you can change up that code, which is a lot of fun. All right, next question is, Tabo wrote, by the way, you only use the word y'all when you talk about GTA 6. Okay, all right. Dude, I can't wait until GTA 6. I got to change my backdrop to GTA 6. This is my GTA 6 backdrop right here. And when GTA 6 comes out, y'all ain't going to see me for a while. I'm going to be taking some time off to program, or pardon me, to play GTA 6. My staff of salespeople hates me right now for saying this, but I don't care. Yeah, I can't wait. That's GTA 6. Yeah. I hope it comes out this year. It's supposed to. It will. And they could charge whatever they want for it too. I think they're going to charge at least $99 for it, maybe more. Yeah. Okay. All right. Next up, Shivansh wrote, I'm writing a business plan. I bought your course on that too for a centralized investment platform, new startup for my internship in it. Any advice? Yeah. So if you want, you could take my MBA degree program. I've got a much more comprehensive version of that, which is up to date. Okay. And I have a venture capital boot camp. And so what I do in the venture capital boot camp part of the MBA degree program, everything is visualized for me. You go through this with me. Okay. We analyze your business model. We start with qualitative stuff. You answer tons of questions, go to market strategy, Then you move on to financials. And what comes out of this are two things. Number one, your business plan, which is massive. And number two, your presentation slides. Okay. And you can learn more about this by going to the description of this webcast you're watching right now. But in the MBA degree program, and as I mentioned, I'm very visual, I have a very long segment, about like 5 classes worth, 15 hours worth, on the venture capital boot camp. And it's based on my experience starting companies, working in venture capital, sitting on boards of companies, and also being part of the Stanford Graduate School of Business MBA program as a guest lecturer. And I mentor tons of students in their venture capital class, tons of Stanford MBA students with their business models. So I teach you everything from scratch, and I provide you with all the templates as well. Okay, moving on to Robert, who wrote, what is your mindset to skill self-invest in the demandable skills for the future? How do you differentiate from current demand skills now that will be displaced in 5 years or less? Yeah. So what I always do is I'm going to show you something. Give me 1 second to pull it up, but you guys are going to be blown away by this. What I always do is I think about, in 5 years, what will my business look like, and how can I disrupt myself as well? And I always want to disrupt myself before the marketplace does. Give me a second to pull this up. This will be worth it, okay? 1 second. Thank you. Okay, hold on 1 second. Okay. So I'm going to share with you, give me a second here. I'm going to share with you AI.
Today's digital age, optimizing user acquisition is crucial, and Pixis is leading the way with generative AI.
Okay, so this is me. This is not me. This is AI Chris, and you're going to see me teaching in multiple languages as well. At some point, I will deploy this. Okay, but I'm thinking longer term. So here's one example. It's not perfect yet, but this is not me, and it freaked me out because I had a conversation with myself before.
AI. By integrating AI into the...
Here's another example. Okay, let's play this one. All right, and let me unmute it. Whoops, here we go, right here.
We're pioneering generative AI clones that deliver hyper-realistic human...
And here's me doing different languages as well, using AI.
Dans l'ère numérique actuelle, l'optimisation de l'acquisition d'utilisateurs est essentielle, et Pixis est à la pointe.
And here's me speaking Spanish. I don't speak any Spanish. The only thing I remember is my Spanish girlfriend when I was younger breaking my heart. She wanted to break up with me because she wanted some espace.
La IA generativa está revolucionando la productividad creativa al inspirar y generar rápidamente activos creativos. Esta tecnología acelera el...
Yeah. So I'm always thinking longer term about how to disrupt myself before the marketplace does. You got to be like that always. You got to ask yourself, 5 years from now, will people watching stuff online to learn be more relevant or less relevant than it is today? Yes. If so, how and where and what platforms? If you're doing a job that's very repetitive, ask yourself, in 5 years, will AI replace this or not? If so, reskill. Sign up for my MBA degree program. Learn more new business stuff as well. Anybody scared of AI, don't be scared. Embrace it. It's your secret weapon. Yeah. And the best use of AI is this. I'm going to show you a really simplistic thing that's going to be life-changing for you. Okay. If you're trying to get a job, okay, or if you're trying to sell something, and you're worried about certain weaknesses you have, I want you to do this. Okay. So let's say I am interviewing for a job in finance. I have no finance experience. I have tech experience. Turn this weakness in an interview into a strength in 2 sentences. All right. And I want you to do the same thing, okay, when it comes to all of your perceived weaknesses. So Chris' extensive experience in tech provides him with unique analytical abilities, problem solving, yada, 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 that can drive innovation, particularly leveraging tech solutions to enhance financial processes, that sort of thing, whatever. And this is a simplistic example, but you can even type something like, I didn't have the best grades in undergrad because I had 2 jobs. Turn that into a strength in an interview, and it will say something along the lines of this. I was able to learn how to multitask and be very efficient because I had multiple jobs at school. Now, this did cause my grades to be lower, but it allowed me to also be focused on being more productive, yada, 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 all that stuff. Yeah. So whatever weakness you think you have in your business model or in a sales pitch, something you're selling, ask ChatGPT or DeepSeek while you can to turn it into a strength. Okay. Next question from Jim Culture, which is, hey, Chris, it's been a little while. Yeah. Just want to wish you and your family well. Thank you. I appreciate that. Same to you. Okay. Moving on to Behruz. First time I've seen you on the call. Hope you join us again. So Behruz wrote, hey, Chris, many years ago, I bought some Bitcoin without knowing anything about it or investing. Now it has grown in value, and I'm thinking about turning it into Ethereum and Sol to stake. What do you think? Yeah. So in my MBA program, I provide you with all the templates you need to do deep research on any cryptocurrency. I'll tell you what I own and have owned for many years, but you got to do your own research. Okay. So I own Bitcoin. I own Ethereum. I own Litecoin, which is like Bitcoin's little brother, little sister. And I also own a Ripple. Okay. Now, I believe that Bitcoin at some point in my life, and this is not an endorsement to go buy it today, please do your research. I think it will reach $1 million at some point, many years from now. I really do. Because it's kind of like digital gold. And a lot of people want to invest in gold. Gold's at an all-time high right now. And if they want to invest in gold, those same people will likely want to invest in Bitcoin longer term. Now, something massive happened with Bitcoin in the past year or two that makes me even more bullish. Number one, the Trump administration is very bullish on it, so government is more accepting of it. Number two, the fact that the SEC is blessing or allowing you to buy Bitcoin ETFs. That's a huge deal. And let me explain why. So when I first started buying Bitcoin, I think it was back in 2012 or 13 or whatever it was. No, 13 actually, when I first started sitting on Bitcoin startup boards. It was so hard to buy. I had to use one of these crazy USB devices, a Ledger Nano, the new one. I haven't even taken out of the package. I don't need to anymore, and I'll explain why. And back then in 2013, 100% of the investors were retail, not institutional investors. Well, what happened was, I think it was about a year ago, you were allowed to buy ETFs. And ETFs with Bitcoin and other cryptos in it. That's a huge deal. And here's why. Up until that point, before Bitcoin ETFs, if you wanted to buy Bitcoin or any crypto, you had to set up one of these devices, cold storage device. Okay, so Ledger Nano, there's Trezor, and a bunch of other great ones as well. And when you set these damn things up, they're so complicated, right? There's like 12 steps, sometimes 24 steps to set these things up. And as a result, once you set it up, you're so damn confused. At the last second, you place an order and you cut it in half because you're just not confident. Well, now there's an ETF. You don't need to use that stuff. You can buy it and sell it. It's liquid. And a confused buyer buys less. Now, the precedent for this, and the reason why I believe this is a positive catalyst for Bitcoin in the long run, is with gold. Okay, and this is fake gold, like I'm a fake teacher. But with gold, the gold ETF, ticker GLD, was released to the market in 2004. And that was a huge deal for me because before then, I would have to buy gold bars. And when I bought gold bars, part of me was like, I don't know if this is real. I'm not really confident. So I cut my order in half. Well, there's an ETF for it, which gives me confidence based on the incredible companies backing those ETFs, especially GLD, that this is the real deal. And I know it's real and it's liquid. I can sell it as well. That's the same thing with the Bitcoin ETF as well. Yeah. All right. Manas, from one of my students from Calcutta. How are you, brother? Wrote, good morning, my dear mentor, Chris, please. Hope all is well. Let's go. A lot has happened this week. Let's go, Habibi. Thank you. Welcome to the house of Habibi. Yeah. So you wrote a dumb question. So we're in advance. No. I looked at the yield curve yesterday. And in short term, it seems inverted for 3 to 5 years. For 30 years, it looks fine. What are your thoughts? Yeah, we usually look at the long term. So let me explain what this means really quickly. And what I'm about to explain is relevant to everybody's net worth on this call. So whenever you hear the government, or I should say the Federal Reserve of the United States, talk about raising interest rates or lowering interest rates, what they're talking about is T-bills, meaning interest rates on short-term money, like 1 or 2 months or something. Then what happens is the marketplace decides for itself what interest rates will be longer term. And if the marketplace decides that in 30 years, and I'll show you the data behind this in real time in a second, if the marketplace decides that it thinks that interest rates are going to be higher in 30 years than today, that's a healthy yield curve. Because what that's saying is that the marketplace thinks that the economy is going to be stronger in the future, therefore the government's going to have to raise interest rates. How does that affect you? Well, every time you hear about changes in interest rates, you got to look at the 30-year, and I'm going to show you how to do it in a second. Why? Because your mortgage is based on this. Any money you want to borrow is based on this number as well. Let me show you the data here in real time. So let's go together to treasury.gov, the United States Treasury. And we're going to go here to data, and then we're going to go to yield curve. Okay. So right now we have a healthy yield curve because short-term rates are lower than long-term rates. It wasn't that way with Biden. So as of yesterday, the 26th, short-term rates, this is the 1 month, was 4.36. I know it's lower here, I get it, but long-term rates, which is what I focus on more so, is higher. That's a healthy yield curve, right? Not incredibly healthy, it's not much higher. But when Biden was president, long-term yields were below. So you had an inverted yield curve. And so an inverted yield curve, what that means is rates are this today, and in the future, people think rates will be here. And that's a crisis of confidence. And the reason why that is scary is quite often that predicts, but in all cases, that a recession is coming. So an inverted yield curve, which again means rates are here today and they're down here in the future, it means that investors think the economy is going to suck in the future. As a result, the government's going to have to cut interest rates a lot. So I hope that answers your question. Okay, next up, Wyoming is making its own stable coin. Are we going to enter a bubble in 4 years with so much optimism around crypto markets? Also, do you think Ethereum is still a good store of assets? Yeah. So when it comes to Wyoming, the state of Wyoming, so no state is allowed to create its own currency. So I wouldn't look too much into that. What I would pay more attention to is if the Federal Reserve or the United States government in general implies that they're going to create a crypto version of the US dollar. Now, the way it works is the US dollar looks the same today that it did back in the 1930s, identical. And governments, or I should say monopolies, are lazy. They don't have to innovate. But if in the long run, the United States government thinks that more people are going to use cryptocurrencies and not US cash, like a lot more people, then they'll make a digital version of this. So I would pay attention to what the federal government has to say rather than on a state level. Yeah. And the biggest threat to national security is cryptocurrencies in many countries, especially left-leaning countries. The more left-wing a country is, being socialist or communist, the more likely they are to make cryptos illegal because they like to control their command-based economies. But the way that governments raise money is as follows. Okay, so this here is an actual United States bond from the year 1944. It's called a war savings bond. And this was used to defend freedom in Europe. Yeah, thank God. So the way it worked back then was the United States government, Department of Treasury, in 1944, they sold this to you, okay? They sold this to you and big investors, and you gave the United States government cash. Now, the United States government used some of that cash to build weapons to defend freedom. And they also took some of that cash and they put it out of circulation. And by putting that cash out of circulation, whenever supply of something goes down, the price goes up. And that's how they raise interest rates and vice versa. They buy this bond back from you, and that puts more cash out there, which makes rates go down. Now, if more people bought cryptos and not US dollars, then that's a threat to national security because US government can't raise money by buying and selling bonds. And if that were to happen, and if the federal government thought that that could happen, they would pretty quickly create a United States-based cryptocurrency. But it'd be on a federal level, not a state level, in my humble opinion. Okay, next question is from ST, who wrote, I'm a transaction advisory services. I do financial due diligence. I do consulting based out of India for United States and UK companies. Should I consider getting a CPA to advance and make my career global? Yeah, it all depends. You got to make sure that you get your CPA designation in the appropriate states where you want to do business. Yeah, that's what I would say. Yeah, maybe a CFA would be better, depending on the type of advice you give. But I would ask clients or potential clients if getting a CPA would help or not. Yeah. Okay. Next up, Mindy wrote, hey, Chris, hope you're doing well. Likewise. Do you think we are going to have a crash like in 2008 in regard to private equity? In addition, what do you think of the Chinese electric car BYDDF? Yeah, that's Boyd, I think. Yeah. Let me answer that in reverse order. If there's a lot of tariffs, Boyd is not a good investment. And I think that the Canadian government about a year ago put 100% tariffs on Chinese electric cars. Yeah. But before thinking about investing in Boyd, what I would do is write a full due diligence report. Okay, what that means is this. So in my MBA degree program, I have a 100-step investment write-up process. I ask you every question about the company. You complete this, and this will help you understand, based on your research, whether or not you want to invest in that company. Yeah. I'm always very careful when it comes to. I want to be delicate how I answer this because I don't want you guys to think I'm stereotyping at all. But when it comes to Russia and China, I'm always careful when it comes to transparency with financial statements. Okay, and that's a critique on Beijing and Moscow, and not the people of Russia as well as China. I've been burned before from an accounting perspective, and I remember years ago. Not just Chinese companies, but also with Russian companies. I remember years ago I invested in Lukoil and Gazprom, and I did a full due diligence on the company. I built financial models, and I was like, oh my God, these companies trade at 2 or 3 times earnings 5 years out. Those numbers are wrong. Yeah, just be careful. Yeah. Okay, with respect to, do you think we're gonna have a crash like 2008 with private equity, et cetera? No, I don't. 2008 was a black swan event. It was a once in a generation event. And it was so severe that in the fall of 2008, the entire planet was within 24 hours of bank machines not working. And whenever there's a financial crash, new regulation gets created. Like the Securities and Exchange Commission was created in the 1930s after the Great Depression. We had a lot of new financial regulation created post 2008. Congressman Bernard Frank was in charge of that. I don't see that happening again. Not to that extent. Yeah. Yeah. All right. Next question is from Smorg, who wrote, do venture capitals invest in ideas, business plans that are not completely built? All the time. All the time. You can have a minimum viable product, meaning an MVP, or a wireframe diagram, for example, on a great idea for a software application. And what sophisticated venture capital firms do is they invest in the management team first and the idea second. In fact, the best venture capital firms on the planet would always rather invest in an A management team with a B business model instead of investing in a B management team with an A business model. And the reason is because companies that are backed by venture capital firms are usually very early to the market. And sophisticated venture capitalists know that the underlying business plan is going to change a lot, and the market too. They just want to make sure they're investing in the right management team that can adapt. Now, a great example of a company that didn't have a product that got backed by a great venture capital firm is with Kleiner Perkins and Nest. Now, Nest was purchased by Google for about $3 billion. And I partnered with Kleiner Perkins on a deal, and I spent time in their office. Okay, Kleiner Perkins is a big venture capital firm. And I met with a guy named Randy Komisar, brilliant man. And he invested in Nest, which is a thermostat company, right? You know, Nest, you see in a lot of houses, eh? And I asked him, I said, Randy, you made billions. You did a great job investing in this company. Tell me, when you first met with the founders of Nest, how good was the product? And he said, well, actually, they just had a block of wood, and they told me what the product will look like. And I was like, oh my God, well, how did you know? He said, well, it was the quality of the management team. You know, ideas are commodities, but execution is not. The bottom line is the jockey's always more important than the horse. There's nothing wrong with having a minimum viable product or just a wireframe diagram of a software product if you want as part of your investor slides early on. Yeah. Okay, next question is, manufacturing and production doesn't start in 4 years, you know better. Are we moving into a recession because Trump said he is in no mood to negotiate this time? Yeah. I don't know. I'd say it's 50-50, a recession right now at this point, but I don't know. And don't listen to economists, man. You know, there's a famous saying that I'm going to butcher, is that economists have successfully predicted 50 of the last 20 recessions. I don't know. I'm always long-term focused. Always, always, always. Now, one thing about Trump is his negotiating skills are lumber hit him, they're superb. You know, he can negotiate a deal. The way it usually works in negotiation is party A says, I want this. Party B says, I want this. They meet here. With Trump, party A says this. Trump says, I want this. And they meet here. And by Trump coming across as not wanting to give in on any deals, that gives him a lot of leverage to negotiate with other people as well, right? And by being protectionist, he's been able to get a lot of companies, you know, to guarantee they're going to build big plants in the United States, including Taiwan Semiconductor recently. Yeah. But I think that if we go into a recession or the market crashes, right? And a lot of this is priced in the market already, by the way. Market discounts what's going to happen. I think he'll reverse course pretty quickly. Yeah. I just hope everything is done peacefully globally, which I think it will be. Yeah. Yeah. And for those of you not familiar with recessions, the definition of recession is 2 consecutive quarters of GDP going down year over year. GDP is like revenue for a country. So if GDP goes down for 2 quarters down year over year, that's a recession. But he's long-term focused, right? And so there's a famous saying, which is Chinese communists are the best capitalists. And the one thing about China that they do great is they're so long-term focused, right, with their planning. And so, you know, China's new 100-year plan is to try to create a domestic economy that is not reliant on international trade. And that's kind of what Trump is starting to think as well, just like the Chinese government is right now. And, you know, as Warren Buffett said, the longer the view, the wiser the intention. And it's a little bit ridiculous that CEOs of publicly traded companies or Congress people or any government official, member of parliament, whatever, it's ridiculous if they're short-term focused. I mean, they just look out, 3 months because random stuff happens in 3 months. We don't know. I think it's healthy to be long-term focused as long as it's not disruptive to the global economy. Yeah, nothing wrong with that. Okay, and great investors are long-term focused as well. And there's a reason why we cannot name a single successful day trader that's been successful year after year after year after year. You can't do it. You got to be a long-term investor, just like Warren Buffett. Yeah. Okay. Hey, Sue. Okay, next up, what about Venezuelan oil? India, China, and the U.S. are the biggest importers of their oil. Will Trump break the economy? Yeah. So what Trump is saying is that if anybody buys oil from Venezuela, he's going to add massive tariffs to that country on top of the tariffs that are already in place, right? And I don't mind that. I like that because, Venezuela is very left-wing. You could call it communist, right? And given the fact that the Department of Doge, or the American government, I don't want to get political here, is maybe cutting a little bit too much from U.S. aid, I don't mind policies in place that are going to deter countries from wanting to become communist. So if you think about U.S. aid, so U.S. aid, which Doge is cutting maybe too much of. If you look at all these things that Elon Musk is cutting, like these international grants, etc. Whenever I see one of those grants, and I think to myself, that doesn't sound logical that that country's getting that money. The way I think about it is previous administrations, previous presidents, including JFK, put that stuff in place, giving money to other countries for one purpose. And that one purpose was to spread capitalism instead of communism. So I am worried that we're stopping too many of those U.S. aid programs. I am. And so putting on massive tariffs on communist countries like Venezuela, for example, I'm okay with that. Yeah. Okay. All right, next up, Emporium Podcast wrote, hi, Chris. Can you talk a bit about PFOF and what you think it gives an unfair advantage to big banks and institutions? Dude, I don't even know what PFOF is. So whenever I don't know something, I'm going to show you exactly what I do. I go, explain PFOF in one sentence to a child, which is me. Payments, order flow. Company gets small payments to send people buy and sell orders to a place where stocks are traded. Yeah. If that has anything to do with leverage, I'm against it. Please forgive me for my ignorance. But Warren Buffett in the fall of 2008 said that leverage and derivatives are weapons of massive financial destruction. So I'm always careful when it comes to leverage, if that's what it means. And the derivatives markets, for those of you not familiar with it, derivatives basically means it's an umbrella term for financial instruments that bet on the rate of change in something, like options, swaps, futures, etc. The derivatives markets is 6 times bigger than the global stock markets. It's huge. Okay. Okay, next up, thank you for that comment. Ephraim wrote, hey, I'm a research equity analyst in a role in Vietnam. Cool. Do you have any insight about how the market here will grow? I'm considering pursuing higher education and working overseas. Yeah. So the best way to analyze the economy of Vietnam, or any economy, is just to look at historical numbers by going to the World Bank website, as well as the International Monetary Fund website as well. In terms of individual companies in Vietnam, what you can always do is whatever companies you're interested in investing in, you can always complete this template in my MBA program as well. Yeah, it works in every country. Yeah. Okay. And then you wrote, my view is that our country, Vietnam, is doing great. Pretty much a lot of opportunities here. I'd love to hear your views on the market, as well as a career path for sell side, switching to buy side. Yeah, of course. Yeah. So the difference between sell side, let me explain it. So the difference between sell side and the buy side is whenever you see a trading floor on television, okay, and you see people on a trading floor talking and all that stuff, that's the sell side. Okay. That's like Goldman Sachs trading floor. Okay. And firms like Goldman Sachs or UBS or whatever, on the other side of that phone, they're talking to the buy side. So they're selling stocks to the buy side. And the buy side means mutual funds as well as hedge funds. Now, if you want to make that change, because you work in equity research, sounds right now on the sell side. If you want to change to the buy side, what I recommend doing is this. Step 1, make your LinkedIn profile amazing. I teach this in my MBA degree program. Step 2, what I want you to do is exactly this. I want you to write lots of reports on your favorite companies. And this is dummy data. I want you to print out this one pager, put it on the back of your resume, and set up lots of informational meetings with people on the buy side. And if you want to stay in Vietnam, that's cool. You can work remotely for buy side firms. Yeah. And then ask for that job. And I can explain in more detail in my MBA program if you want, or here. Yeah. Okay. Next up, I've got a question from Psyched Life, who wrote, hey, Chris, I've left a commercial real estate brokerage firm not that long ago. it was not the right fit for me. So I'm looking for my next role in real estate specifically. Any ideas? Yeah. Oof. Yeah, it's tough. Okay, so if you didn't enjoy commercial real estate, you can always move into residential real estate. So what I would do is the best way to make a killing is to always use other people's money, OPM. So what you can do is in my real estate course in my MBA degree program, instead of being on the commercial investment rental track, take the residential investment track and see if that's something you enjoy. And then the next step after that is we can talk about making a business plan for you to start your own company doing residential real estate. I can help you every step of the way. In my MBA program, which you can learn about in this the black box down here, set up a call with us. I have daily group Zoom calls to help you with your career, your business, etc. Everything I do, there's a 30-day, 100% money back guarantee. I've got over 2 million paying students humbly in every country in the world. My return rate is 1%. Yeah. And I love what I do. Okay, next up, Ignatius, how are you? It's been a while. Wrote, hey, Chris, hope you're well. I have a quick question. Sure. How do firms determine the par or face value in an IPO listing? Yeah. So when a company goes public, and we do a case study on this, Facebook, or Meta as it's called now, in my MBA degree program. I invested in Facebook when I worked in venture capital, pre-IPO, and I also invested when it was publicly traded. And I remember the IPO well. What happened was it was on a Friday. The IPO crashed. And the reason it crashed is because Morgan Stanley botched the deal. And they botched the deal because they didn't understand what institutional investors wanted to own the stock at. Okay. Now, the way that it works in an IPO is there's something called book building, where the investment bankers will build a document, and they'll build all the orders, meaning they'll ask every single mutual fund and hedge fund, how many shares do you want to buy at what price? Okay. And then once they figure out who wants to buy what at what price, then they'll set the value per share for the IPO. Now, a successful IPO usually goes up 30% on day one. So you want to understand that the institutional demand is going to be much higher than where the stock is now. Why does an IPO pop? Why does it go up 30%? Well, if an IPO wasn't undervalued, why would you invest? Might as well just buy it in the open market after it goes public. So there has to be a discount. So whatever value the company, the bankers think that institutional investors want to value the company at, they discount that by 30%. And the way they do it is they look at various valuation methodologies, including price to earnings, price to revenue if the company's not profitable, discounted cash flow, and they come up with a target price for all three. And the average target price should be at least 30% higher than where the stock is going to be day one. Yeah. And if you have additional questions, please let me know. Now, the reason that the Facebook IPO broke deal price way below, one of the reasons was at that point in time, back in 2012, when I participated in the IPO, I remember in this document, right, and this is the S1 prospectus you can download from sec.gov. There's a bunch of material risks. And the most important risk, and people don't read these things, you got to read them. The most important risk was Facebook at that point in time didn't have a mobile strategy. It was ridiculous, man. If you wanted it, the Facebook app didn't work. And so you had to use Chrome or Safari, whatever, in order to access Facebook. And the problem with that was it's a small real estate and there were no ads. You couldn't really see ads. And this was before sponsored stories. And Zuckerberg did a great job turning around the company. So that's one of the reasons why it broke deal price. And if you have more questions, let me know, please. Thanks. But never invest in an IPO until you go to sec.gov. Let me show you really quickly, okay? Very quickly, because I don't want you guys to buy any IPO or invest in any company before you do what I'm about to show you. All right. So you go to sec.gov, which is a government agency in the United States, Securities and Exchange Commission, created in the 1930s. You enter in the ticker of a company, okay? And then what you can do is you can read important press releases, meaning 8Ks when they release earnings, the annual report, the 10K, or the quarterly reports. Or what you can do is you can also read the S1 document, right? And so if you look through here, you'll be able to search and find the S1. Let me see if I can find it here by just going search. It's actually not that easy to search for. Okay, search. Let me go here, actually. I'm going to go back here. Okay, let me go here, all. And I'm going to search. Let's go back to 2012. Okay. January 1st, 2012 to, okay, go here. Okay, here it is here. Okay, so the S1 is right here. And whenever you see the letter A, that means amended. So you always want to look at the most recent S1. So the last S1 release before the Facebook IPO was on May 16, 2012. So if you click here, you can read that same document that I just showed you. It's right here. Okay, so it's right here, and this lists all the risks. Okay, and Morgan Stanley led the IPO, which is why they're top left here. And right when the IPO is set, what they'll do is in the final version, they will put the share price here. Okay, proceeds to Facebook, proceeds from selling shareholders, as well as the price to the public as well. Now, if you do a search for here on the word risks, right, there's 29 instances of the word risk. You can read all the risks in this document. You have to do it before investing. And I remember back then, I think it was mobile was what I picked up on. Mobile is the biggest risk here, right? So if you keep looking through risks, you'll see that mobile was here it is here. Growth and use of Facebook through mobile products where our ability to monetize is unproven. Yeah. So I was all over this right here. Yeah, this is one of the reasons why I was worried about the IPO. Okay. You got to read this stuff. And it's fun. And I'm here to help explain it. Okay. Dark Matters wrote, hey there, Chris, I love you. Thank you. I love you. Okay. Next up from Ignatius wrote, how do we account for changes in inventory and work in progress on the balance sheet and why? Yeah. So there's a couple things. So I'm releasing a course to my MBA degree program students very soon, which is going to help you do a deep dive on inventory, as well as analyzing every aspect of financial statements and all the footnotes. Okay. And we're going to use AI a lot in this product. And what I'm going to do is you enter in any company you want. We create a massive report for you. And then for the AI prompt level, you can set it to 8th grade, which is my maturity, or hedge fund level, etc. And what will come out of this is an executive summary and a massive detailed write-up as well. And what you're referring to is something that's in the footnotes. Now, when companies release financial statements, okay, there's usually 3 major financial statements: income statement, balance sheet, cash flow statement. Now, in the annual report called the 10K, there are a lot of footnotes. Okay, there's usually 10 to 15 different categories of footnotes that explain all this stuff. A lot of it will be inventory related. So if you want to understand inventory write-downs or inventory in general, you can't just look at the balance sheet. You have to read the footnotes associated with the balance sheet as well. Pick any company if you want to. I'll do it in real time for you right now. And that will help you understand changes in inventory, especially from an accounting perspective, right? It's a big red flag if a company changes from LIFO to FIFO, meaning last in, first out, or first in, first out. And I can go in there in more detail if you want me to. Same thing with work in progress. Yeah. And leases and all that stuff. Okay. Next up, Tommy wrote, what is market capitalization and how do you quantify it? Yeah. So it's basically the number of outstanding shares times the share price, right? So let me show you an example. So let me go over here and let's go to, and don't pay for any services. At one point, I took my first sponsor on my channel, which I decided never to do again. It was Seeking Alpha. I'm not doing it anymore because they tell you what stocks to buy. To always use free services. Let's go here to Tesla. So what you're going to do is you're going to look at the outstanding shares, okay, times the stock price, right? And what you can also do is you can calculate it by going market cap divided by stock price, just math. So let's ask AI here. Alexa, what is $906 billion divided by 281?
$906 billion US dollars divided by 281 is $3,224,199,288 US dollars and 26 cents.
3.2 billion shares. Yeah. So 3.2 billion shares times a share price of 280.63. That's the number of shares outstanding. Yeah. Okay. All right. Give me 1 second. Ooh, a lot of questions today. Yeah. Okay, give me 1 second. Okay, next up, Diego. First time I've seen you on the call from Blue Summit Capital. Hope you join us again. You wrote, your video about not worrying saved my life. Thank you. Thank you. And I debated putting that one out here, but let me go there really, really quickly. God bless you for that. Thank you. So let's go here to my YouTube channel, and I'm going to show you guys how to watch that. For anybody that's worrying about anything in life, please watch this video. I really poured my heart into it. Okay. So it's right here called How to Stop Worrying. And this is actually a little excerpt of my MBA degree program. Yeah, from the personal growth part of it as well. So if you guys want, go to my YouTube channel, search for the word How to Stop Worrying. Actually, what I'm going to do, just do a search for it. Yeah. Okay. And God bless you, Diego. Okay, moving on to Arda, who wrote, hey, Chris, I'm just a listener. Thank you for your weekly sessions. Thank you so much. And for those of you that want to listen over podcasts, we re-syndicate on every major platform. You go to harounmba.com, go to About, that's how we say it in Canada, and then we go here to podcasts, and we're on every major platform as well. If you guys want to listen in the car. That's how you say it in South Boston, the car. Okay, moving on to the next question, which is, are we moving to an age where top line, meaning revenue, and the reason it's called, never memorize stuff, guys. The reason it's called the top line is whenever you look at an income statement, it's the top line. Okay, whenever you look at the bottom of the income statement, net income, that's the bottom line. So whenever you hear a CFO or executive say, what's your top line growth? That's how they sound. It means, what is revenue growing at? Or, what is the bottom line? That's what old executives sound like. They're talking about net income. So the question here is, are we moving to an age where top line, meaning revenue, will be the most beautiful thing, and midline would be next to zero? As Zuck said, they're training mid-level engineering to be done with AI. Okay, I'm sorry, I botched that question. You're talking about top line versus mid-level engineers. Okay, you're talking about senior executives versus mid-level. Yeah. Yeah, so what's happening right now in real time is Facebook is letting thousands of programmers, meaning developers, go. And the reason they're doing that is because they're using AI to replace those jobs. And Jensen Huang, who's a brilliant founder and CEO of NVIDIA, he said recently that you should not study computer science in university anymore. And the reason he said that, right, is because, and if anybody else said it, I'd call it BS, but it's him. You know, Jensen's amazing. Jensen said that because AI, he says, is a perfect companion to replace the role of the developer. And so Jensen said, well, what do you study in university? He said, you study liberal arts. And the reason he said that is because if you study the liberal arts, it allows you to be a little bit more creative, right? Because you study historical patterns and you have to think differently, be more creative with essays and all that crap, which I didn't like. And he also said that in his opinion, he thinks the United States education system will pass the rest of the world in the next decade. And he said this because in the United States, unlike other countries, in the United States, when you go to university, quite often you don't declare a major. You have to take liberal arts. And then maybe in your second or third year, sometimes later, you declare your major. So it helps you to think differently. And it's no surprise that Steve Jobs, God bless him, used to always say that Apple lives at the intersection of technology and liberal arts. You think differently. And so as I think about the founders of Apple, the two main founders, I should say, Steve Jobs and Steve Wozniak. Steve Wozniak was technology, and Steve Jobs was liberal arts. That's why it worked. Okay. Arda, thank you for that comment. Okay, next up, is Canada in a rough spot because it exports electricity, oil, timber, steel, and so much to the United States? And if tariffs go, they'll pay around $40 billion more. And I mean, consumers, yeah, it's rough. It's rough for Canadians. Canadians are very dependent in the United States, and Americans are very dependent on Canada. I mean, they're best friends. And please understand, for Americans, watch this webcast. When Canadians boo the national anthem, they're not booing America. They're booing the policy. Okay, and I think it's unfortunate what's happened. I think it's a misconception that the bulk of fentanyl comes from Canada. It's actually only like 0.5%. Yeah. So, yeah. But the United States has got to be careful too. Like Trump knows that he can't, if he overdoes it, which we're getting there, I don't know. there's a lot of millions of jobs in America, especially ones close to the Canadian border, are dependent on Canada just for trade and electricity as well. Ontario, a lot of the electricity for Michigan, state of Michigan, comes from Ontario. Yeah. Let me leave it at that. Yeah. Okay. Shavance wrote, how do I get off screen addiction? I think 6 to 8 hours of time wasted has destroyed my potential. Yeah. Yeah. So a couple things. So if you ever use screens at night, please, I'm begging everybody on this call, okay? Like if you use TikTok in your bed, which I do, I want you to make sure you're wearing blue blocking glasses. Now, I went to Stanford University for a sleep study, and this is life-changing what I'm about to show you. If you don't wear blue blocking glasses, I can show you where to get it too. If you don't wear glasses that block blue light, you're not going to get much, if any, deep sleep. Okay, you'll get light sleep and REM, but not deep sleep. And you need deep sleep to repair your mind during the evenings and your body as well. Otherwise, you'll age and you won't be productive. So if you're going to use your handset during the evenings, I'll show you what to buy. Okay, and these are dirt cheap. I'll show you the exact ones I bought. Okay, so it's blue block. Let's try this. If this doesn't work, I'll search for the word glasses. Okay, come on. Just search Amazon for blue blocking glasses. Here it is here. Okay. They're pretty cheap as well. And I've ordered it multiple times. Yeah. So for $13, you can get 2 of these. And I don't know, you could look like JFK era FBI employee or something. Yeah. But this works. And it blocks blue lights. Okay. Now, blue light comes from all devices, right? Even if you're in night mode, it doesn't matter, right? And blue light stops you from getting a good night's sleep. Okay, and this is scientifically proven, and it's dirt cheap to get these devices. Please do it. Yeah. In terms of screen time, you can always monitor it. There's in settings on Android and also on iOS. You can set only a certain number of hours you can use your iPhone per day, or leave it in the car always. Yeah, which is hard to do. Yeah. Okay. All right, next up, Sean. Hey, Sean. Sean and his wonderful wife, Michelle, are in my MBA program. Sean, who also went to Berkeley, like my son, Andrew, wrote, good morning, Chris. Hey, bud. Should we be modeling the balance sheet and income statement of our country since we are the shareholders of that country? I once heard that education debt is the largest debt item of the United States. Yeah, and President Trump is just abolishing the Department of Education. I think what he's doing is he's taking it from a federal perspective and saying, okay, federal government, you're not in charge of education like you were before. It's now the states. Give the states more power. Yeah. And I like when the states have more power because it keeps our country in check that way. I don't agree with everything Trump does, of course, or any president. Yeah. In terms of doing a forecast, no, don't bother. Don't bother. It's too hard. Just accept the fact that the United States economy will never, revenue or GDP for America will never go up or down more than 1 to 3%. It's just a large country. That's it. It's kind of like doing a financial model on a massive company. It's not growing anymore. It's a law of large numbers. It just can't grow. Yeah. What I would do instead is go to treasury.gov and always analyze the yield curve. Always. Because that's kind of telling you what growth expectations are. And I can talk about that in more details if you want me to. Yeah. Yeah. And I'm looking forward to seeing you today on our weekly 3-hour group Zoom call. Yeah. Okay. Another question about Canada. Yeah, and Mark Carney, the new Prime Minister, again, I like him. I worked at Goldman at the same time he did. I think he's the right choice. He used to be head of the Bank of Canada as well as, I think, the Bank of England as well. He's good, yeah. Even though I'm not a liberal. Okay, so Manas wrote, what about Canada removing American wine from the shelves? Also matter of 51st state. I think now it's a serious thing. Is that even possible now with election in 4 weeks? No, Canada will never be part of the United States. And it's demeaning, man. It's like I'm a proud Canadian and a proud American, but enough with, people calling, the governor of Canada, love or hate liberals, whatever, calling the prime minister of the country of Canada a governor. We have our pride, man. Like, stop this 51st state thing. Yeah. 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 Canadians love Americans. Just understand that. But Canadians just don't like that policy of yeah. Okay. Next up, I was watching Adam Newman and WeWork. How do these entrepreneurs get so filthy rich when their company goes bankrupt? Yeah. So what happened with WeWork, right? And their headquarters are right around the corner from mine when I worked in venture capital, is you never want to invest in a company that has to execute on two different things. You want a company to be laser focused on one thing, right? So if they're focused on two things, it's hard to execute perfectly on both. So with WeWork, they were focused on two things: renting office space and investing in the companies that rent in the office space. It's just too hard to do. But he was a great salesperson. That's why he was able to raise a lot of capital. Yeah. And apparently unethical as well. Yeah. Okay. W Gang wrote, "Hey, Chris, love your videos. Thank you." Then you wrote, "What do you think about a buy-side career in Australia?" Yeah. I think it's great. Probably the most senior executive in Australia, a guy I used to work with at Citadel, really good guy. We were teammates, small team. His name is Dion Haroun. I think he runs Goldman Sachs Asset Management in Australia. He's been very happy at doing that. But no, I think it's great. I think it's great. Now, the buy side in Australia is dominated by the bigger banks in Australia. Yeah, there are fewer hedge funds, more mutual fund asset management firms. Yeah. Now, if you're going to do that, you're located in Sydney or Melbourne, the best way to get a job is don't send in your resume. You want to be able to network like crazy and set up informational meetings, which I teach in my MBA degree program as well. Yeah. Okay. All right. But if you're going to do that, so Australia is very much like Canada and Brazil. Right. So it's a natural resources rich economy. In fact, whenever the price of oil or commodities goes up a lot, the Australian dollar, Canadian dollar, and the Brazilian real go up a lot as well. Right. And so you have to really understand natural resources if you're going to be a generalist investing in Australia. Right. And you're very much tied to China as well for import export of natural resources, iron ore, et cetera. Yeah. Okay, next up, I was watching you bashing DCF, discounted cash flow, and still teaching terminal value and discounted terminal value. Have you heard of the Berlin method of valuation? It's more complicated in DCF as it discusses government change, geopolitical, etc. Yeah, if it's more complicated, I'm not a fan. Phil, goodness, how are you? Phil, Germany. I haven't seen you in years or a long time. So Phil was one of my MBA students from, I think it was last decade. And he was my first student to ever use my book template to write a book. And the name of the book was Super Students, which is prophetic because, I'm a teacher. I love my students. And it was about chess. Great to see you. Excellent. And then you wrote, what's your opinion on the DuPont method? Is it worth using? Thanks. It can be, but it's kind of academic. What that means, DuPont model, is this. You take return on equity and you break it up into three different formulas to better understand return on equity, right? I've never used return on equity as the primary driver for me to understand whether or not to invest in a company. Yeah. Okay. And Manas wrote, Kathy Wood started as an economist with finance grad degree. She doesn't even have an MBA and is running $12 billion fund. Is America different from the rest of the world on talent acquisition? No, not at all. No, you just have to be able to network and be very well spoken, which she is. And she's been underperforming the markets for years, but she is great at leveraging the media for, just to market herself, which is genius. Kind of like how Warren Buffett is great at public speaking and doing interviews. It's all free advertising for them. And that's why I always want my students in my MBA program to write weekly articles on LinkedIn so that you're thought of as a thought leader and so that the media eventually reaches out to you or you can reach out to them, which is how I've been quoted in lots of publications. You network that way. Yeah. Okay, Emilio. Hey, Emilio. Wrote, do you believe high school math class should teach finance? Absolutely. Yes. Basic accounting and finance. Yeah. The most basic skills in the world to help you become successful should be taught in high school, right? And that's why I teach my MBA program, how to network, how to manage your own money. Business schools don't teach you how to manage your own money. They teach you how to manage other people's money. You should also be taught, how to create an income statement, and teach it in a simplistic and fun way like this with lots of prompts, like show and tell. Yeah. Okay, and I do have to go in a couple of minutes. There's tons more questions. If you're in my MBA degree programs, I'll see you in a couple of minutes for our weekly 3-hour webcast or small group Zoom call. If you're interested in joining my MBA program or my MBA programs, any of them, just go to harounmba.com and you can just scroll down to learn a little bit more about the programs. We have monthly plans as well. All these programs here, these are the only programs available now. There's no access to my other programs anymore. And with these 3 programs, you can always get access to daily group Zoom calls with me, and then one-on-ones as well. You can always right at the bottom here, just click on book a meeting if you want to. It's kind of tough to see that, but it's at the bottom of the screen here. Or go to the description of this video to book a meeting with somebody on my team to talk about my program in more detail. Okay. All right, let me see if I can get through a couple more quick questions before wrapping this up. Okay, Manas wrote, have you used Bollinger Bands and stochastic RSI? And also a teacher from Turkey taught me that exponential moving average is better than simple moving average as it's a hallucination anyway. Yeah, I would say just stick with the basics. So number 1, look at fundamentals, then valuation, then a distant third, look at technical analysis. And you want to get seduced into just looking at technical analysis. Otherwise, I promise you, you'll lose money. And that's why in the 100-step template here, which you have access to because you're in my MBA program, I have the very last step. One of the last steps here is technical analysis. And with technical analysis, I would just look at 50-day, 200-day, as well as RSI as well, and nothing else. Yeah. And you want to use technical analysis also to help you understand the risk reward on a stock. So if you're going to buy a stock, you can use technical analysis to figure out what the floor is. And then upside is your target price. So risk minus reward should be positively skewed, always. Okay. Phil wrote, are you using a Mac? And if so, how's it working out? Is it the latest model? Thanks. Yeah. Yeah. So when I first launched my MBA program, which you were part of last decade, I bought literally top of the line Mac, right? Mac Pro with literally 1.5 terabytes of RAM. I got it fully loaded because I'm a nerd. And what I use right now is just one of those Mac Studios, and it's just as good, if not better. Yeah. So yeah, I use a Mac Studio from 2023. Okay. This is like bring your own screen stuff. 64 gigs of RAM works great for me. Yeah. Yeah. But I've got multiple computers because I never want to use my production computer when I'm using Final Cut or doing other stuff as well. I'm strictly Mac. I used to use Parallel whenever I wanted to access Windows, but I don't really need to access Windows anymore. Yeah. I like Macs. Yeah. Okay. Okay, give me 1 second here. All right, Tado de Olivier Jr., great, pleasure to meet you. Je veux faire la classe matinée ce matin. Yeah. My French is awful, sorry. Wrote, great using AI, totally disruptive. I saw the use of it on another YouTube channel, also fantastic. It's great, it's great. And for my vlogs as well, I've been using it a lot for stock video for free instead of wasting money and giving it to Adobe. Yeah, it's fun. And if you guys haven't tried Sora yet, please do so. It's so much fun. Okay. Okay, Peter C. wrote, in my LinkedIn boot section, the summary section, I've got a couple sets of bullet points with my more relevant skills and certifications. Is it better to not do that and create more of a narrative or perhaps a mixture? Yeah, Peter, if you're in my MBA degree programs, in 5 minutes, if you want, on our weekly 3-hour Zoom, I can write your entire summary profile section for you. I can do it really quick. Yeah. And the way you want your summary section to be on your LinkedIn profile is you always want it to be set up like it's a bio written in the third person. So let me show you mine just real quick here. Okay. All right. So you want it to be in the third person, okay? Okay. Oh no, my team just changed this. Okay. So I hired a couple people to help out with social media. I'm going to tell them to change that. Okay. But you want it to be written in the third person. Okay. Let me show you one of my clients. Let's go to Dr. Dion Vernon. Okay. So Dr. Dion Vernon graduated from my MBA program, several years ago. And you want it to be written in the third person. So you want it to be set up to the extent that you're about to give a keynote speech and somebody says to you, can you write they say to you, you're about to give a keynote speech, do you have a bio I can read to introduce you? That's how you want to write this, okay? You want it to be no more than 3 sentences per paragraph. And for the rest of your life, never have more than 3 sentences per paragraph. Otherwise, people won't read it. You want it to be less than 600 words. You want it to be written in the third person about you, and you want it to be somewhat empowering and written obviously with good grammar and stuff. So I can definitely help you with that. Let me just go here to Slack. Okay, and tell Anthony. Okay, Anthony. Please change my LinkedIn profile about section to how it was written yesterday. And please don't change the profile. Thank you. Okay. Real time behind the scenes. I love my team. All right, I think I'm going to have to wrap up today's call. Yeah, I'm going to have to wrap up today's call in a second. Let's see if I can do a couple more questions, answer really quickly here. All right. All right, next question is Tommy wrote, how do I complete a detailed report on a privately held company where financials are not available for a job interview? That's a great question. So what I would start with is the business plan template that I have in my MBA degree program, okay? You can fill this out here if you can for the company. And when it comes to the financial section, what I would do is this. I would find the 5 biggest competitors to that private company and analyze their financials. And if they're publicly traded, the 5 companies similar to the one you're analyzing, then all the historical data is available. So I would go back, go to sec.gov and go to their oldest annual reports because you'll be able to see the financials of the company, even in the S1 when it went public, for several years before it went public. And you can create your financial model that way. Yeah. And if you're in my MBA degree programs and joining the Zoom calls, 3-hour Zoom calls in a couple of minutes, I'm happy to help you create that from scratch. Yeah. Okay. All right, guys, I'm going to have to wrap up today's call. Again, there's no webcast next week because I'm going to be on vacation. I'm going to end this call like I always do with a very short video. It's a Steve Jobs interview that I licensed that's going to change your life. Check this out. God bless you all. Thank you for the wonderful questions today. Click the like button, subscribe, and all that stuff. My marketing team always asks me to say that. God bless you. I'll see you soon. Thank you.
When you grow up, you tend to get told that the world is the way it is, and your life is just to live your life inside the world, try not to bash into the walls too much, try to have a nice family life, have fun, save a little money. But life, that's a very limited life. Life can be much broader once you discover one simple fact, and that is everything around you that you call life was made up by people that were no smarter than you. And you can change it. You can influence it. You can build your own things that other people can use. And the minute that you understand that you can poke life and actually something will, if you push in, something will pop out the other side, that you can change it, you can mold it, that's maybe the most important thing, is to shake off this erroneous notion that life is there and you're just going to live in it, versus embrace it, change it, improve it, make your mark upon it. I think that's very important. And however you learn that, once you learn it, you'll want to change life and make it better because it's kind of messed up in a lot of ways. Once you learn that, you'll never be the same again.